Okay, it's all been fun and games about this GameStop thing, and how the plebes are completely screwing over the hedge funds. Yeah, it's very amusing, but you do have to understand why the quote unquote powers that be are really freaking out, especially at the Federal Reserve. Now, I'm going to go through some issues here in this little video. This is a throwaway video, but you have to follow along so that you can understand why this thing, the destruction of Melvin Capital and how a lot of hedge funds are getting caught in a short squeeze and all the rest of it, why this is actually extremely serious. No screwing around. And people who control monetary policy in the United States, right now they are freaking out because what is happening in this situation where these hedge funds blow up and go bankrupt, this could potentially be a catastrophe, okay? And I'm not defending these idiots, okay? I'm certainly not. But what I am saying is that the financial system could very well go kaflooey over this whole GameStop situation. And let me explain how. You see, over the past 12 months, certainly since the start of this so-called pandemic, the Federal Reserve has been pumping out money, just printing money out of thin air, and has been propping up the price of assets, that is, stock. They've been propping them up by putting out a lot of cash into the financial sector. And this has created essentially asset hyperinflation, whereby stock prices are extraordinarily high and they are completely divorced from reality. And this hyperinflation of assets has made certain rich people, Elon Musk, Jeff Bezos, Bill Gates, etc., it's made them incredibly rich. I mean, to the tune of $3.5 trillion, roughly. Because what's happened is that this money has gone out into the financial sector to prop up all of these financial assets. Now, why do they want to prop them up? Because you see, these financial assets are worth far less than they are being sold on the stock market. Because, of course, these companies are not making any sales. I mean, these cruise lines, for instance, their ships are not going out into the Caribbean. The airlines, they're not flying around, during Thanksgiving and Christmas break and whatnot because of the pandemic, because of everything being shut down. But see, these companies whose revenue is not commensurate with the price of the stock, well, if the price of the stock goes down, then a lot of other financial players start to suffer, specifically fund managers, and especially pension fund managers. They would not be able to make their payments to retirees. They would not be able to cover a lot of financial obligations that they have to regular people, to regular customers. And so the Federal Reserve essentially made the calculation that they would print up a whole boatload of cash to prop up all of these companies, to prop up the stock market, to prop up the bond market, so that these companies would have the cash to pay off their obligations. Now this, you can debate whether it was the smart move or the wrong move. There are arguments on both sides. There are stronger arguments on the side of what the Fed did. If the closure of the economy had lasted, 3 months, maybe 6 months, but we're going on a year now where the economy is essentially shut down. And this is proving to be a disaster. It's proving to be a disaster because the price of these shares is just unreal. It's just floating on nothing but air. The price of these companies has hyperinflated. Tesla, it might be a very fine motor company, but it is not worth over $1 trillion. It's not. It's simply not. It does not have the profitability, the earnings, the revenue to justify such a price tag. And neither does Amazon, for that matter, or Apple, for that matter. These companies' share prices are absurd, at absurd levels. And this was engineered by the Federal Reserve. Now, we are in this hole. Now, the problem we're having is that, with these companies like Citadel, like other hedge funds, if they start to go bankrupt and they start to liquidate all of these assets are going to collapse in one big kaflooey. I mean, just one big go, just one big crash. Because all of a sudden, everybody's going to realize that all of this stuff is worthless. Why is it all worthless? Because these companies have not been producing true profitability and true revenue for over a year now, or coming up on a year, come mid-March. And so these valuations are absurd, just as absurd as GameStop being valued at $500 a share, when the company's real valuation is something like $15 a share. And so the Federal Reserve is terrified that all of a sudden GameStop, this whole GameStop kerfuffle, which is very amusing, right, will trigger a mass sell-off across the board. That Wall Street will realize the game is up and it's time to get out of Dodge. And so that's why they're freaking out. Now, if all of these companies all of a sudden were to sell off in one big go, it would be a catastrophic crash. And what would happen is that a lot of banks, a lot of pension funds, a lot of investment funds of different sorts would not be able to pay back their investors, would not be able to pay back the people that they have insured. They would not be able to pay back the pensions that they owe to people, to workers and whatnot. And so what would happen is that all that money would go poof, and all of a sudden the Federal Reserve would have to somehow start printing even more money. And that would create real hyperinflation of consumer goods and services, of foodstuffs, of the things that you and I use on a daily basis. So this GameStop situation is very amusing, but you have to understand that it terrifies Janet Yellen, the rest of the drones over at the Federal Reserve. It scares the hell out of just about every reputable banker, because they realize that they are, how can I put it? This is like the Hindenburg, and the whole thing is about to burst. And they all sense it, they all recognize it. A lot of people have been warning about it. A lot of people have been preparing for it. Why do you think that Bill Gates, for instance, has gone out and purchased something like 250,000 acres of farmland? I have no idea how much an acre of farmland runs. Just say, I have no idea, but say $10,000 per acre. That sounds reasonable. 250,000 acres at $10,000 a pop, that's $2.5 billion. Why do you think that somebody like Bill Gates would blow $2.5 billion on farmland? Well, because a lot of people like Bill Gates, and frankly, like myself, have realized that we are edging up closer to the end of this experiment that the Federal Reserve has been carrying out over the past year. And it will mean the collapse of the dollar. It will just blow up. And anything in a dollar denomination will become worthless, even as consumer goods and food supplies rise in price. Now, do keep in mind that people like Bill Gates and other very rich people like him are buying farmland, not commercial real estate, and certainly not housing or apartments or anything like that. Because what's happened is that, see, there's been an inflation of commercial real estate, and there's been an inflation of housing as well. Because all these houses, these apartments, these office buildings, they are overvalued. And especially now with COVID, that the rates of occupancy are so low, we'll see it's all about to go pop. And the only people who are going to make it out okay are those who have real assets. Real assets like, for instance, farmland. Real assets like precious metal. Not certificates of precious metal, note, but actual physical precious metal that they have in their possession. Because a lot of these precious metal brokerage firms, you know, they sell you gold or silver or platinum, and what they're really selling is certificates. And they have these commodities on hold somewhere, and often as not they sell it more than once, and often as not, in the case of a sudden and sharp collapse, and they sell off the commodity, and all of a sudden you have paper that's literally worthless. So the only people who are going to make out okay if this whole thing goes kaflooey are people who are holding hard assets, farmland, physical possession of precious metals. Not Bitcoin. Bitcoin is ephemeral, And you guys who are into cryptos, you'll believe me, but I've been arguing this for years. It's speculative. And when the whole stock market goes kaflooey, when this whole big giant balloon pops, as it might very well because of GameStop, well, cryptos are not going to be your savior. The only thing that will save your hide is having actual assets, hard assets. Look at Bill Gates. That guy, I think he's scummy and creepy and weird, and his relationship with Jeffrey Epstein bears looking into. But the guy knows more or less what he's doing insofar as investments. Why do you think he's buying farmland? Because it's a hard asset. Everything goes kaflooey, but land always remains. So anyway, it's funny to watch this GameStop thing. It's funny as hell. I mean, I'm just laughing my ass off. But it's scary. And those creeps at the Federal Reserve and the financial services and the hedge funds, they are really, really scared because they realize not that some hedge funds are going to go bankrupt. I mean, that's funny. And to some of them even, it's very funny. No, they realize that the game might be up, that this giant balloon that has been blown up since mid-March of 2020, it might blow up any moment. It might happen today or tomorrow or within the next week or so. Not kidding. And they're aware of it. And that's why they're freaking out. And that's why they're doing these illegal moves with Robinhood. That's why they're just doing everything possible to shore up these hedge funds that made these bad bets. Because it's not the hedge funds in and of themselves that they want to save. They want to save the whole damn system.